Hey folks, Dan Ferry here, the rate update. Today is November 16th, 2020. Great news out in the markets right now. Looks like we might have another vaccine that's having fantastic results with the virus. If that happens, guys, we're going to see the economy kick back in fast and furious. What's that going to do to mortgage rates? Don't go away. We'll find out here next. Okay, so in the headlines, we have some of the biggest information out there right now is hopes of a coronavirus vaccine. Okay, and that's the headlines right here. Okay, so between that, what the Federal Reserve is doing, and the possibility of another round of government stimulus, you're seeing a run in the market. And the stock market's up about 300 or 400 right now. Last time we saw this was a couple weeks ago when Pfizer came out and said that they might possibly have a cure or a vaccine with a 90% cure rate of the coronavirus. And we saw the stock market go up over 1,000 points. Unfortunately, we saw mortgage rates skyrocket. So what happened? Well, as I try to explain a lot of times is good news in the economy, good news in the world is great for stocks. Then the other piece of the investment spectrum are bonds. Bonds are usually a safe haven. As you get older, or if you want just a specific return, or you're seeing a lot of uncertainty in the market, you're like, okay, the coronavirus might come back around. We might shut down the economy again. We might do this. We might go to war with somebody. We might something out there. You normally are not buying stocks in a skeptical arena or environment. You're normally buying stocks when the economy is booming, manufacturing is booming, and there's a lot of employment. Okay, that's when you're buying stocks because companies are doing very well. Their stock prices are going on up and up and up and up, and you're riding that wave. When there's a huge uncertainty in the economy, in the world, in their country, people tend to move more of their assets into a safe haven. You'll hear that word safe haven. You might hear it if you watch CNBC and Squawk Box and those other areas. You might hear safe havens. Those are bonds. Is mostly what they talk about there because they have a specific rate of return, and people are like, I'd rather have a 1 or 2% rate of return than lose 20% of my money. Okay, so that's basically what happens in the bond market arena. So now, here's what I follow on a daily basis, and the whole gist of my channel is to educate you guys out there. And most of the watchers of the channel are mortgage advisors, financial planners, realtors, and consumers. Okay, because I know that a lot of consumers send me on a daily basis their loan estimates or their fee worksheets so that I could compare them on what they're getting offered versus what I can do. And I'm going to show you that at the end of the video, how you can get me your loan estimate or your mortgage statement. Let me come back to you and say, here's what I can do for you. Here's how much it would save you, and answer any questions that you might have. So that being said, let's get to the headlines. The headlines again today is basically saying, everything is getting a little bit okay based on the hopes of a vaccine. Okay, I'm going to be the bearer of bad news on some of this and say, between Corona, I think going to rear its ugly head, and it's doing right now. I'm not an Einstein. Anybody that watches the news, the viruses are picking up on a daily basis. But we got the flu season here, guys, and it's going to be hitting anytime soon. Between that, the Corona, that time of year where things usually slow down anyways, other than retail. You got the weather turning. You got all this other stuff going. You got the election that's going haywire. Just a whole slew of things. I was surprised today, honestly, to see this vaccine news not push up the market higher. But I think people learned because about 2 weeks ago, when there was news of the vaccine coming out, another company, the stock market went up over 1,000 points. But we did see a big push up in mortgage rates. Here's what my thought is, and my prediction is, we're going to have a vaccine that's approved. You're going to see, a wave of stocks starting to move higher. I don't think you're going to see mortgage rates really move at all, because we're going to have a really tough quarter. The next 2-3 months are going to be brutal on the economy and everything. Once the virus or the vaccine comes out, spring, summer, we should start getting our recovery. And I think we're going to see a fairly quick recovery. We're going to see inflation creep its ugly head. So for the next 6 to 8 months, I'm predicting basically a stagnant mortgage rate environment. Stocks are going to bounce all over the place, but come spring and summer of next year, we're going to see the stock market take off again, housing take off, but unfortunately, we're going to see mortgage rates start to move up because of the economy is going to have a V-shaped recovery and inflation is going to start raising its ugly head. Now, a lot of people are going to come back and say, well, the Federal Reserve said they're not going to do anything for at least 2023. Okay, I'm going to discount that and say if they see inflation spike, they're going to do something fairly quick. However, the Federal Reserve does not control the mortgage rates. So that's for a whole nother video. You came to my channel to see what rates are doing today and what my educated ideas are for where rates are going, where we're going to be in the next week, 2 weeks, three weeks, months, year, and so forth. So let's get on to it. Here because of this. And what is this? Basically, I'm trying to teach you how I come up with what mortgage rates are going to do. All right, I can tell you what they are today, and I'm going to go over that here at the end of the video. But my whole reasoning for this is to educate you guys on what actually is a part or what moves mortgage rates, and we can watch trends. We can watch a lot of the technical pieces of the puzzle. But that's what I do for you. You guys have a full-time job. Use this channel to just click and watch for 15 minutes a day and educate yourself on what's going on in the markets. So what we follow here and what I follow on a daily basis, tick by tick by tick, and you might even see this move, is the mortgage-backed securities market. This is actually what's the biggest instrument that determines or is part of your mortgage rate. Okay, it's actually a bond that trades that is full of mortgages. This number here represents the price of that bond. So what happens is, as the price of the bond goes up, you're going to see a green number. That means the price you're paying more for a bond. Thus, you're getting a lower rate of return. That lower rate of return equals lower mortgage rates. If you see this number red, meaning the price goes down, that means you're paying less for the bond, so you're getting a higher rate of return on that investment, means a higher mortgage rate. Okay, so that's how that works. So we love when this number is always green, but it can't always be green. So again, to recap this, we're saying as prices move up, rates come down. As prices go down, rates go up. All right, so that's what we follow here. So I'm seeing what's going on today, but what we also do is we look at history. We look at the trends that are going on. Where most mortgage advisors give their clients, I'll say they're loan officers, they're not mortgage advisors. They're just plugging in the data. You like what you see, they lock you in and move on. I always say, if I can get you 0.25% lower in rate, would you be happy? Well, that's what you would hire me for. And most of the time, I'm giving you a lower rate and lower costs anyways. So if I can guarantee you the same rate that somebody else has with lower fees and the potential of maybe even getting a lower rate, you're in a win-win-win situation, okay? So you just saw this move to 2, all right? So that means rates might come down just a little. But if your mortgage advisor locked you in or your loan officer locked you in at 0 or -2 and we're at -2, you probably have a higher rate than you would otherwise when we're at +2, okay? That's in its simplest forms. All right, so now we start looking at the technicals. We want to say, okay, this is what's going on right now. But what do I see the next few days, weeks, or so forth? Well, I watch a lot of technicals, such as the GDP, inflation numbers, shipping numbers, employment numbers, all this other stuff, along with trends. This here gives me what the trend is doing, okay? So you're going to see a ton of lines in here. These are different areas. This is a long-term ceiling. This is a long-term floor. This is a short-term ceiling. This is a short-term floor, okay? So what do I mean by that? Well, if you follow this, you're going to see we bounce in these lines. Over the short term, we've been bouncing in between these lines. Over the long term, if I went back a little bit farther in my charts, you're going to see we've been bouncing through these long-term lines. Okay, so that's one thing. So I'm thinking, okay, we should be trading in this box or within these lines. Now, to even dig down a little bit deeper, what if things done over the last 100 days, 50 days, and 25 days? So this gives me the averages on where the MBS market or price has been over the last 100 days, which is represented in purple, 50 days, which is represented with the black line, and it's hard to see, but it's in here, and 25 days, which is representative of the brown line. And both those lines condense right there, okay? So the Fed has been doing a fantastic job. What the Fed's been doing is they've been stepping in on a daily basis, buying enough in volume of the mortgage-backed securities to stabilize the market and keep it right in this area here, which I'm saying this is where we should be trading. Okay, we're just above that right now, but this is in the long short term, this is where we should be trading. So today's a good day because we're above that 25 and 50 day moving average. Okay, so but I expect really nothing to take place with mortgage-backed securities today. Thus, really nothing to take place with mortgage rates. So the next analysis that I do is I follow on a daily basis is where my trends are for my market rate indicators. This gives me the 30-day conforming rate, 30-year jumbo rate, 30-year FHA rate, 30-year VA rate. Gives us what the current rates are nationally on average. And then it also goes over a 1-day and a 7-day delta. That means delta means change, and then a 1-year change. Okay, so what we do is we go through here, and on a 30-year fixed rate right now, the rate is 2.875. That's 2 basis points lower than we were on Friday, and two basis points higher than we were last Monday. Okay, so what's 2 basis points? Well, if you go 2.85 basis points is the 100th spot. So we got tenths and hundredths. So it would be 2.87 yesterday or Friday. It dropped down 2, so we're at now 2.85. So the basis points, it's a 100th of an adjustment. So very minimal. When you get to big adjustments over like such as here, you have a 99 basis points. That's 1 basis points away from 100, which is 1%. So you can see last year, VA rates were 199 basis points, so 1% higher than they are today. Same thing with FHA. Almost the same thing with conventional. And then the jumbo is 68 basis points lower, so just between 0.5 and 0.75% lower. So and then again, these are the national averages. Okay, so that's that part of things. So now let's go over what my rates are for today. So when you're breaking down a loan, there's conventional financing, which is just the standard mortgage, and then there's government-backed mortgage programs, which is USDA, FHA, and VA, and then there's jumbo loans, and those are loans that exceed the conventional loan limits of $510,400. Okay, so now I want to break these down even further and say there's a purchase and rate and term rate. So if you're looking to buy a home as a purchase or rate and term, you're just taking your current balance and changing the rate and or term. So say you're at 4.5%, you had a 30-year mortgage, and now you want to take out a lower rate and a shortened term. So that would be rate and term. The parameters behind my numbers here is a $250,000 mortgage on a single family home that is your primary home. Okay, if you have anything that varies from that, there will be rate differentials. Okay, then the next thing is what the credit score is and what we call your loan to value. So the credit score is you have 3 repositories, TransUnion, Experian, and Equifax. We take the middle score numerically. So if you have an 800, a 700, and a 750, we use the 750 because numerically that would be the middle number. Loan to value is basically loan to value. So the loan amount of $100,000 to value of $200,000, so it'd be $100,000 divided by $200,000 would equate out to a 50% loan to value. So in this representation here, I'm using an 80% loan to value. Okay, so purchase on a conventional loan, 30-year fixed rate, purchase or rate and term at a 740 credit score or higher, 80% loan to value. My rate is 2.75. And then APR over here is 2.852. So now if you want to pull out cash, you owe $200,000 on your mortgage and you're like, Dan, I want to get $50,000 in cash to pay off some bills, do some things around the house. That is called a cash out. The 740 credit score at 75 loan to value is 2.875. So you can see that the rate goes up just a little bit if you're looking to do cash out. Now, rates also vary on your credit scores. If you have a 700 credit score, your rate's going to be higher because it's higher risk. You have poorer credit. If you go to a higher loan to value, higher risk for the bank, higher rate. If you have a 4-unit building versus a single family home, higher risk for the bank, higher rate. So there's variations in this when it comes to your rate. So when people call in, I always say, I need you to answer some questions for me. What kind of property is it? What is this? What's your credit score? What loan amount do you need? Are you looking for cash? There's a whole slew of questions I ask. It's not to drive you crazy. It's basically to find out so I can give you an accurate quote on your rate. Okay? So the next thing is, let's go to, this was a 30-year fixed rate. Now let's go to a 15-year fixed rate. And you can see, because it's a shorter term, it's less risk for the lender of default. So you can see the rate's lower. Look, 2.25 there, 2.75 there. So a 0.5% lower, and the parameters are the same. You're looking to purchase or do a rate and term. Credit score is 740, 80% loan to value. The rate is 2.25. If you're looking for cash out, it's 2.5. So you can see by just the different terms has different rates. Okay, so now let's get into my government programs. FHA, VA, and USDA. Basically the differences between this is, let's start at the bottom. A USDA loan is a rural, specifically rural program that you have to qualify. The property has to qualify and your income has to qualify, as well as your credit. But if you do qualify, and we can let you know if you think you might be in a rural area that would qualify for this, just let us know. Just email me your address and I'll look it up and tell you if that property is eligible or not. But you can go to 100% financing. You can buy a rural property with the USDA program with no money down, 100% financing. On a VA, you have to be a veteran that's honorable discharged, or you could still be in the military. There's a whole there's layers of criteria that makes you eligible. And again, if you're contemplating that, you probably already know if you're eligible or not. But if not, just let us know, and we'd like to work with you on that to see if you are eligible. That also, you can purchase or do a refinance up to 100% of the property's value. So meaning you could buy the property with no money down. The rate, 2.5. FHA, you need to put down 3.5%. So you can get a loan amount of 96.5% of the home's value. Credit scores start on all these programs right now at 600. So you can go a 600 credit score and still qualify for these programs. The rate on all my programs right now, government programs, are 2.5, APR 3.024. Okay, so that's those. Now what we're really known for is our jumbo programs. We have loans up to $3, $4, $5 million. But this one is breaking down. It's $1 million loan. You're looking to purchase, do a rate and term, 740 credit score at 75% loan to value, 3%. That is a 30-year fixed rate, no points, no teaser, no interest only, no adjustable. No, it is a 30-year fixed rate. We do have a boutique jumbo program in specific areas of California that you can go 95% loan to value. And if you're out in California and you're like, hey, Dan, I want to know if I qualify, just shoot me an email. I'll give you that information at the end of the video on how to get a hold of me or my team. We'd love to help you out. So those are my rates for today. So next I want to go over, you're like, Dan, I love this stuff. What can I do next? Well, one thing is you go to my website, or I just posted something. We just launched our mobile app. It's awesome. You can basically do everything from the mobile app. You can even, if I need a pay stub, you can, in the mobile app, you can take a picture of it. It will upload right into your folder or your loan application. It is fantastic. I'll show you the link to there. It'll also be down in the description below. What I ask a lot of people to do is, if you're looking to buy a house or refinance and you've already started and you got a quote from somebody, email me that quote. just email it to me, and I'll give you that information here in a minute. And it'll come, you'll send that information to me. I'll write all over it in red pen and let you know I'll counter. Most of the time, you're getting this rate with this amount of fees. I'm getting you a lower rate with the same fees. Or I'm getting you the same rate with lower fees. Most of the time, I'm getting you a lower rate and lower fees. And that happens probably 90% of the time. So that's that part of things. So now you're like, Dan, what do I need to do to get this stuff started? Well, first thing I need you to do is you could go to, you can even click down below in the description to upload my app. And what you'll be prompted, you'll go right here and you can kind of start the ball rolling. You hit say buy a house, you buy that, you click the email that, and it'll launch you right into my mobile app. Or you can go to my website. The best way to do that is therateupdate.com. There it is. Go down here. There's an 800 number. You can reach me and my team via 800 number, 844-775-LOAN. If you scroll here, you can watch a video. This is me going through a team meeting and walking you through our office. Kind of cool. The next thing is right here. If you're like, Dan, I just want to get the ball rolling. I haven't started yet, and I really want to do this. You can click Apply Now. You can hit the home purchase qualifier. You can hit the refinance rate checker. You can get a free quote right here. All these tools will launch you right to us. Okay. Another tool we have for those out there, home owners. If you want to find, this is the best system to figure out how much your home is worth. Click this. And it's a free tool to you guys from me. I pay for it. I don't sell the data or anything, but it is fantastic. If you use Zillow, Trulia, Realtor.com or whatever, this thing blows it away. All you have to do is click that, put in your address, and it'll give you tons of information on your home. So that's all I got to say for today. Like I said, if you want to let us know if we can be of help to you, please reach us. Shoot me an email. My email address, almost forgot to tell you. The best way to get me is D for Dan, Frio, F-R-I-O, at preferredrate.com. So again, if you're in the middle of a mortgage refinance right now or purchase, you already have an offer from another lender, email me your loan estimate or fee worksheet or whatever they gave you to break down their loan amount, the rate, the fees, and all that other stuff. I'll get back with you as quick as I can. If not, you can just click on our website, get the ball rolling, and usually within 15, 20 minutes, half hour at the most, one of us will be giving you a call to go over your application and any questions you might have. So that's it for today. God bless. Take care. Sorry for the lengthy video, but I hope you learned a lot. Take care. I'll see you tomorrow. Bye-bye.